The steps to investing €100 every month. This is the time to act, and €100 a month can make all the difference in the future. In addition to day trading in shares, I also invest money in the stock exchange, because it is simply one of the best types of variable income investment that exists and that you can have total control over, making it possible to open and close positions very easily. Invest a little every month. After years it will be a lot. If you are one of the people who, with this unrealistic rise in prices, are seriously thinking about investing in the real estate market in Lisbon and Porto and then renting or selling, you better think again. Prices are at historic absurdities and the profitability potential is very limited, not to mention that there are a lot of risks, and housing credit is no longer as accessible as it used to be. People saw that investing in the stock market is one of the investments to consider, and they could not have made a better choice. Not only is it not necessary to make a lot of money these days, commissions are low or free. For example, the XTB brokerage charges a commission of €0 up to a volume of €100,000 per month, while in national banks, the commissions are very high and they also charge the securities custody commission. If you only have €100 per month to invest in the stock market, these are the strategies you should consider following. Invest in an ETF that replicates the performance of the S&P 500. Or invest in fractional shares of companies with potential. These are the strategies that investors with little money are using to grow their fortune over the next few years. Having little money is no excuse for not investing. Not investing is a bad decision. You can use both or choose the strategy that best fits your profile as an investor. Each strategy will have different results, so you have to make a decision. Strategy 1. Investing in an S&P 500 ETF. Investing for a very long term, that is, investing for 10, 20 or 30 years in an ETF that replicates the S&P 500 index is, without a shadow of a doubt, a more popular and easier strategy. All you have to do is every month, on a day of your choice or when you receive your salary, transfer money to the broker and buy one or more units of an ETF that replicates the S&P 500 index. With a very long-term strategy on the S&P 500, even counting the years that generated a negative return, the last 10 years have generated an annual return of about 12% per year for investors. All this when investing in the S&P 500 index. There was no need to waste time analyzing company shares, making a decision whether to invest in company A, B or C and how much money. Thank you, guys.